Let's get over to Aadil Zaman now. He's a partner at Wall Street Alliance Group to talk about the latest on the markets. And Aadil, I know you say that US markets right now look to be the best house in the neighborhood to you. Why is that?
Well, great to be with you, Brian. What we have to understand is that in the United States, about 70% of our GDP is consumption. And if people are willing to consume, the US economy is going to continue to thrive. And right now, the American consumer is sitting on savings from the pandemic and feeling deprived that they didn't get to spend on things that they wanted to spend on during the pandemic. So they are willing to pay for higher prices. And for that reason, we feel that the US markets will continue to do well. And the Federal Reserve has taken the right decision to raise interest rates to control inflation.
The American consumer, of course, seeing their spending power slowly eroded, though, by that inflation, as you suggest. But what do you think the stronger catalyst is going to be for markets? Is it going to be that inflation narrative, or is it going to be earnings?
I think the earnings will, as we get into the earnings season, we feel that earnings will be positive. But what we have been telling our clients is that the first half of this year is going to be volatile with the season of sowing, where you'll get to buy good quality companies at cheap prices and market declines. And the latter half of the year is going to be a season of harvesting, where the equity markets will do well and you'll get to reap the benefits. So that's the way that we are seeing this play out, and that's the strategy we are allocating for our clients at Wall Street Alliance Group.
So in terms of the earnings outlook, how are valuations looking to you right now?
Valuations are looking reasonable after the recent declines, but we are in the camp where we do feel that this respite in the market last week was temporary because the Russia and Ukraine tensions still seem to be going on. And, we've seen skyrocketing oil prices, but food inflation is also astronomical. With Russia and Ukraine collectively supplying about 25% of the wheat exports, wheat prices year over year have gone up by about 60%. So we think that that's going to be hitting a lot of the low-income countries substantially. And therefore, we do think that in the near term, the equity markets are going to be volatile.
Yeah, we're going to get a CPI read from the US in the coming week or so. What are you expecting to see in terms of the trajectory of inflation? Have we reached a peak yet?
I think that as far as inflation is concerned, there is going to be continued pressure, especially with oil prices being up. Supply chain issues over time will ease up. But wage inflation, because of labor shortages, supply chain, oil inflation, and food inflation is going to continue to pressure the market. So I think that's something that we have to navigate through, and that is going to be a challenge that the markets will have to deal with in the coming months.
I just want to run a scenario by you. If markets begin to tank in the US, do you expect the Fed might blink in terms of its inflation fight?
We feel that the Chairman Powell has set himself up in an ideal position. Through the language that he used in the last meeting, he will raise interest rates if things are intact, but he's given room for himself to back off if the situation merits it. And, we think that the US right now is going to have a very keen eye on oil production. And I think in terms of our domestic policy, we are going to focus more on oil production, which will eventually bring down oil prices. And, that's how that inflation is going to come under control. Because the US has realized that it cannot rely on Saudi support to stabilize oil prices, with the Saudi leader declining to take Biden's call. So we feel that oil is going to be important in terms of the US markets. And that's also another area where we are allocating assets for our clients.
Are you allocating any assets to China at the moment? Valuations look pretty attractive there.
Well, we feel that the game changer in China has really been what US and its allies blocking Russia's access to its foreign reserves. So that really changed China's focus from instead of cracking down on their industry, to be able to actually support its markets and economy. So we do see China stabilizing, but we see the biggest beneficiary of this being large US companies that are doing business in China. So companies like Apple or companies like Tesla, where we are allocating assets for our clients, those we feel will be big beneficiaries of Chinese market stabilizing.
Very quickly, China accepted, we barely talk about COVID anymore. Does your gut tell you that we're near the end of this crisis now?
I think so. And I think we are at a point, Paul, where we've learned how to deal with it. And as the virus is getting less severe, it is getting more manageable. So I think that challenge is behind us. But, we have plenty of other challenges, geopolitical and inflation in front of. So in active management and managing portfolios to be able to deal with that is very important.
All right. Aadil Zaman, partner at Wall Street Alliance Group. Thanks so much for joining us on Bloomberg Daybreak Asia.